Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for July 14th, 2019. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.12 fell from 1.19 last week. The total count of securities in bullish or bearish patterns increased 1% to 2,900. The count of bearish stocks increased 4%, while the count of stocks in bullish patterns decreased 2%. The Pirls P&F market breadth summary chart shows us a market now 4 weeks in bullish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by emailing s2pmarketsignal@protonmail.com for payment and access instructions, or by visiting Patreon. To subscribe to the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your email address in the space provided and click Follow. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 58 points for the 7th advance in 19 weeks. At a positive 109.09 points, it continues below all 7 tops above plus 100 and above the 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on lower average daily volume. Momentum. The CCI 20 daily, in a Woody's uptrend at 130.38, is up from 124.96 last week. It continues above the plus or minus 50 range required for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 17 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 weekly in a Woody's uptrend at a positive 123.19 rose from a positive 117.53 last week. After last week's successful trade simulation, we await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Summary: S&P Retail and some tech on the top. Oil services on the bottom. Bullish disk drives continues in the top 5. S&P Retail and Comp Tech have entered the top 5. Oil services has entered the bottom 5. REITs has left the bottom 5. Bearish, semis, brokers, and KBW Bank have left the top 5. Focus this week from www.zerohedge.com. Quote, Barclays was right. It is a melt-up, and this is how Bank of America expects it will end. End quote. Last Wednesday, the bank's equity strategist Manish Deshpande said that a market melt-up scenario was now his base case, explaining that, quote, after the truce in the U.S.-China trade war post the G20 meeting in Osaka, The melt-up scenario we had outlined previously is now our highest probability outcome, leading us to update our 2019 S&P 500 price target to 3,000, end quote. With the S&P closing above 3,000, there is no more doubt stocks will continue melting up well into the next recession, if not depression, as it means that the Fed will have no choice but to monetize the stock market in the not-too-distant future until eventually central banks achieve the hyperinflation across all assets they have been seeking for so long, which prompted us to revisit the considerations laid out in the Barclays report. After all, if the bank was right about the melt-up, what else would it be correct about? Here were the highlights. We believe that the Fed will still embark on an easing cycle. The weakness in global manufacturing continues unabated, and the subdued inflation and softening inflation expectations will likely prompt some insurance cuts from the Fed. Indeed, as Powell's congressional testimony and FOMC minutes confirmed, no matter how strong last week's payrolls report or this week's hot CPI and PPI, the market is convinced there is no data that can change the Fed's mind to cut rates in 3 weeks. Since the market now realizes it is in control of monetary policy, there is no reason at all to move the Fed funds, which can predict a rate cut indefinitely, oblivious of what the economic data indicates, especially with the Fed now symmetric on inflation overshoots and willing to let the economy run hot. Barclays writes the following: mini bubble melt-up scenario 65% probability. As we have discussed before, U.S. equity strategy, parsing the equity bond disconnect, June 7, 2019, and recession versus soft patch, winners and losers, 12th of June, 2019. Since the 1960s, the Fed has embarked on 14 easing cycles. Of these, 5, in retrospect, occurred outside official NBER recessions. During these episodes, equity markets rallied substantially over the next year, and the rallies were almost entirely driven by an expansion in the PE multiple by 2 turns. Given the decrease in trade tensions, we view this as the most likely outcome. Escalation scenario, 15% probability. This is the scenario where the trade war escalates, which, given the recent G20 meeting and the prospect of a prolonged truce, has become much less probable. Recession, 20% probability. The current industrial recession bleeds into the broader economy, and even if Fed eases, they cannot stave off an equity sell-off of approximately 20%. In short, one last hurrah as the Fed creates what may be the final melt-up, followed by a big top in stocks in the second half, as the bond bubble and Fed credibility bubbles both pop. Thank you for watching this week's Santu Pirls Stock Market Commentary video, featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, S2P market signal at protonmail.com. For Santu Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.